Hey, traders, welcome to Charts and Coffee. Happy Thanksgiving, everyone. Hope everyone's doing great and enjoying a day off from trading. And, why do I do Charts and Coffee on Thanksgiving? Well, everyone's still sort of getting going, and it's a great time to sit down and take a look at my trades, really, for the year. I'll start to look back on my trades for the year on Thanksgiving. I'll start thinking about what it is I want to do in 2023. I'll start doing a lot of things on Thanksgiving. I love this day, and it's not about the turkey and the stuffing and the mashed potatoes, although that stuff's great. It's really about taking a look at how I've done this year and appreciating, as it's known, is what's the gain been for you this year. Maybe the gain is the fact that you've learned some new strategies. Maybe you've learned how to use some new indicators better. This is a book it's actually co-written by Ben Hardy and Dan Sullivan. It's called Gap and Gain. And I believe you can get it on Amazon or even for free, the PDF version or the Kindle version from the website. I would definitely check it out. Traders are type A people. We're achievers. We push. And a lot of times we have a habit of not appreciating how far we've come as traders. And I'm guilty of that. I'm terribly guilty of that. I always look at how much better I could have done, which is not bad, but it puts us in a constant striving for the horizon. So Thanksgiving is a great time to recalibrate and say, hey, what have I accomplished this year? And frankly, if you say, look, this wasn't as great as 2020 or even most of 2021, Rog, this year has been hard. But if you're still here and you haven't blown up your account, I'm telling you right now, that's a gain. If you're even up a little bit, that's a gain. If you learn to day trade and say, look at the daily time frame, and now you're looking at your portfolio like we do in the Sector Secrets Mastery, that's a gain. So I'm really appreciative of this year because it reminds me that, we can together as a community tackle really difficult environments. So let's get to it, gang. I'm sure there's some questions that are coming up. I'll be happy to go between the Thinkorswim and the TradingView charts. I see quite a few of you logged in. So awesome. Again, appreciate the time. Let's get to it. This is the day, gang, where I have a little bit more time. The markets are closed. I'm happy to answer whatever questions I can. So I'm going to keep all three of these platforms running. And let's go ahead and jump into the first question. Hey there, Jessica. How are you? I'm a futures trader. That's my first love. Jessica, I love futures trading. Noticed a futures membership and Sector Secrets. Yes, we have both here at Simpler. The description does not mention futures trading and Sector Secrets, which is better for futures trading. And is it 30% off? Oh, I don't know if the Mastery is on sale with Turkey. I do not know that. However, what's the difference? This is the best way that I know to break this down. How many of you look, I'm a child of the 90s. We were inundated with boy bands, right? Remember there was a boy band, there'll be 4 or 5 members of the boy band, and maybe you like the band, or maybe you like when one of the singers spun off and did their own thing, right? It's sort of like that. If you like the opportunity to learn from multiple traders, multiple styles, multiple tools, and you want that exposure, options room, futures room, day trading room. That's what that's designed to be. It's the boy band. If you want to follow your favorite singer from the boy band and they've spun off into their own solo career, that's the Mastery. And that's the best way that I can describe. And it tickles me. Again, lots of boy bands in the 90s. And so you have to ask yourself then, do I want to learn from one trader or do I want to have the exposure to many? That's the best way to think about what your choice should be. And then as far as futures go, my Mastery is basically everything I do for the most part. When I say everything, within reason, right? I mean, if there's something that I'm personally doing in the markets, I do try to share that. I try to be cognizant of the cost of the trade. It's on a small account service, but it is a service that I do try to think about the scalable mindset that I use. And I'm just trying to open up a browser here so we can head on over to Simpler Trading and take a look because I really don't know. And if you head on over to our Black Friday, it's just Turkey, right? I think it's just Turkey. So let's see, memberships, excuse me, Mastery. Yeah, I would just check that out. And then where am I? There we go. Sector secrets. Yeah, check that out and try to use Turkey. It's almost everything, but I do not know if it applies to the mastery or not. But it does apply to the hourly price movement ranges and a number of other tools. So it depends on how you want to go about learning, Jessica. So thanks for the question. And that's a common one we have here at Simpler. What's best for me? And it really depends on whether or not, for example, you've studied whoever's work and say, you know what, I want to dedicate myself to that approach. And that's where the masteries are really great. All right, next up, Mark. Hey there, happy holiday. Thank you. You too. UUP has fallen, but FOMC meets in 3 weeks. UUP likely to rise again. That's a great question. And so remember that the dollar, which is what UUP is also the dollar index. And the dollar index is also another way to look at the euro. This is the euro, 6E. The 6E is frankly trying to, you can see what's happened on 6E. It's trying to turn into an uptrend. Here's a dollar. It's trying to turn into a downtrend. This has been a fairly recent phenomenon. This is something organized this week. If we were talking last week, both of these were neutral. Dollar has, based on structure, become a short the rip. Yeah. And the reason that's probably the path of least resistance, barring any sudden short squeezes and barring any sudden increases in inflation, CPI, PCE mostly, barring that, the dollar's trajectory is going to be lower because we, as a trading and investing public, now know that the Federal Reserve is likely to take rates, the Fed funds rates, to 5%-ish, somewhere in that area, and then that's going to be it. The only reason they would have to go higher, which would be bullish to the dollar, is if inflation numbers are higher than what they're printing at the moment. And how can we measure this? Head on over to the FedWatch tool. I know those of you that are regular Charts and Coffee watchers, you're quite familiar with this. So head on over to the FOMC FedWatch tool, and what you'll see is where we are for May, and ask yourself, as long as we're pretty much clinging to 5 to 525, right? 500 basis points to 525 basis points, which is just 5% to 5.25% in the target rate. As long as these two columns, anything that has 500 in it, are one of the two tallest columns, this is really what's going to continue to allow equities to rally. If we have a higher than expected PCE or CPI, you saw what the durable goods numbers did the other day. That durable good number was higher, equities sold off. Unless we start edging to the right of this graph, equities are pretty much cleared the path for higher highs. Not because inflation's under control, not because necessarily, we can poke at all the different parts of the economy that are suggesting we should be lower. Again, we trade the market we have. We don't trade the market we think is going to organize. And therefore, as long as this is where the Federal Reserve is going to take rates, we seem to be okay with it, and we're rallying the market in light of it. And that's the way I'll look at that. And if this is where these columns stay, Mark, this is not bullish for the dollar. It's actually bullish for the euro. It's potentially bullish for the pound, and it would then be bearish for the US dollar, which, by the way, from a technical standpoint, has come off the V-score highs and it looks to be testing, possibly breaking the 200 propulsion, which is the 8 and 200 exponential moving average cross. And it seems to be ready to break the anchored volume weighted average price for this year. Those are significant breaks, gang. I'd keep a really close eye on that area on the dollar index and whether or not we go through the 105 handle. All right. That would pretty much seal the deal for short the rips. We're already short the rippable, right? That would pretty much seal the deal. All right. Let's see. Hit the like. Yeah, I appreciate that, crypto golfer. I appreciate that. Thank you so much. All right. Next question. XME. What are the levels to watch? Very fresh uptrend. Good eye, Wilgie. Yeah, I would say since it is so fresh, the 21 exponential is no longer plotting that 8,200. So my 21 propulsion, nope. I would say let's look around 48.5 to 48.35 for a buy the dip. And also keep in mind that the area around 53.90 going to the 54 handle seems to be resistance. So keep an eye on that. But this is buy the dip on XME. And then on XME, this is something that we do in the mastery quite a bit when we're scanning. This is our scanning process. So what I'll do is I'll pull up the XME. I believe I have it. There it is. We will check the holdings because I haven't updated this one in a minute. Let's take a look at the holdings in XME. And this is your metals and mining ETF. For those of you that may not be familiar with this, this is your metals and mining ETF. Looking at the holdings, STLD, which is Steel Dynamics, followed by this BTU. This is not an especially high concentration weighted ETF. There are other metals and minings, for example, SLX, which is more high concentration weighted. But this is a great list of names that are tethered to this narrative, and it gives you instant access to those symbols that are most likely to be moving together and for reasons that we understand, which is they're involved in this metals and mining exposures. That's the XME. Not a lot not to like, right? Once you update this thing, I'll just save the new flexible grid. I have a flexible grid for a number of ETFs. Boom, there we go. And my mastery folks, this layout, not the one for XME, but this large chart and the 11 small chart layout is in the room drive in the Sector Secrets Mastery. And you just populate the individual charts to reflect the weighting in order of an index or a sector ETF. I would keep an eye not only on pullbacks in XME. It may not be the most liquid options chain. You might want to check that out. I'll have to double check what the liquidity looks like. I would go out no closer than December. And if you can go out to January 20 versus December 16, and then the trick is what's the strike? So that might be tricky. It would be probably the 50 strike, which has plenty of liquidity, but then all the liquidity is at the fives, 50, 55, 60, etc. There's only 21 days to expiration for this December 16, and the liquidity is meh. So I'd go at 16, maybe you look for a pullback, 50 strike. And that would be as XME pulls back to those levels that I mentioned. If you're waiting for the wave, that'd be fine. That would be a 50, say 0.05 trigger for the 50 calls. Keep an eye on that. As long as that structure is bullish, we're right as rain. Yeah. All right. Next up is how do I identify intraday trends? Hey there, Michael. And what strategy indicator do I use to enter pullbacks to that trend? I identify trends, period, intraday or end of day, Michael, with a combination of, let me grab my drawing tool here. Where's my drawing tool? There it is. So I'll use this right down in here. This is what we call the multi-trend. And the multi-trend allows me to look at both momentum, that's the upper row, and trend, that's the bottom row. It doesn't matter if it's a 5-minute chart, daily chart, or weekly chart. It's the same tool that I'm using. So that's why I identify the market structure. What's the market trend? Up, down, or sideways? And then what strategy or indicator do I use to enter pullbacks in the trend? So once I've got the trend, I can look at the V-score. That'll give me volume. I can look at volume profile. I can look at an anchored VWAP. Those are all anchored volume tools. And usually what I'll use, let me show you my trending layout on Thinkorswim. Let's say we stick with the XME for a moment. What I'll do is, so I've got a green structure, XME is in an uptrend. I've got the anchored VWAPs I could use. But my preference is typically the wave, the 34 EMA wave. And that's the 34 EMA on the high, the close, and the low. And that's how the grab candles are colored. By the way, gang, I've made these indicators throughout my trading teaching career free, meaning the wave and the grab candles. They're available on multiple platforms, including TradingView gratis. And that's how I like to trade trends. And it doesn't matter if it's an intraday trend, a 5-minute chart, daily time frame, or a weekly. That's the way I like to trade trends. Now, if I can take a price-based tool, which is what the wave is, the 34 EMA wave, and add volume and add, say, time, I could add different factors of the market. So I can say, okay, this is relevant price-wise, this is relevant volume-wise, this is relevant perhaps even volatility-wise, and put that to work. That's exactly what I like to do. All right. Okay. So next up, the book title is Gap and Gain. Yes, there's 2 copies of that. One's a very thin book, and then one's a thicker book from Benjamin Hardy, which is just elaborating on the gap and gain concept. And again, I think us traders, especially in a year like this, have to appreciate, maybe this year we learn more about stop loss placement. Let's face it, years like 2020 teach us nothing. In fact, in a weird way, while they are great for the P&L, they're terrible for skill development because nobody gets better when the markets are easy to trade. And the markets were easy to trade in 2020. And you're going to have years like that from time to time. They're great. Enjoy them when they happen. And remember, they're an anomaly. But if you've gone through 2022 and you've got better at stop loss placement, you've got better at risk management. You had to, by the way, whether or not you've had to get better at those. You've accomplished that if you're still here in November. And so, yeah, that gap and gain's a great one. I have to go back to that from time to time. All right. Stonecastle asks, love the show. Thank you very much. The reason you are short gold, trend was neutral, stochastic was overbought. All right, let's jump on over there. So yes, we have a long put position in GLD. So, and that's from way up in here. We had an optional target that was hit. So my sector secrets mastery folks are at a break even, at worst, scaled out of half the position, and now at a break even at best. And as long as I don't exceed the break even price of this entry, GLD puts, I'm going to stay in there. But what was the entry? Yeah, the entry was very much, here, let me show you another layout that we use. So the entry was very much, and the way that we build trades, those of you that took the volume decoded class will know, start with structure, and you could go to an indicator, whether it's stochastic or the V-score. Look at how powerfully the mean has been keeping movement upside in check, right? By the way, gang, that's why I've been encouraging people to focus on the long side, buying support in equities for the same reason. It was a volume-derived reason. So while most traders were out there calling for far lower lows, we've been saying since July, gang, those lower lows, those dips were actually excellent buying opportunities to set up oversold buys. And that has been true, generally speaking, since July. Same tool. What's volume telling us? And the same thing that told me to be not bearish since midsummer is the same thing that's telling me to be bearish at resistance in gold. So if this does turn into an uptrend, and it is trying, the strategy will change, right? Really important distinction there. But while it's neutral, to your point, that's exactly right. Stochastic, the V-score, the structure, the pattern. And that's the way we taught the setup in volume decoded. We're looking at 3 things. Remember, a setup isn't just one thing. A setup isn't a candle pattern. A setup isn't a read on a secret squiggle, an indicator. It's how many criteria, I will usually stick with 3 to 4, which criterias, right, have to be checked. And when we can check those criteria, we have a setup. So I hope that makes sense. And it's trying to trend, though. Stonecastle, it is trying to trend. Kim, yeah, it's my pleasure. This is our third, can you believe it? This is our third annual Thanksgiving Day Charts and Coffee. It's Thanksgiving. I'm just going to still drink some coffee today. Today, another thing I'm thankful for. Little things, gang. The coffee my husband and I like to drink, Death Wish coffee. I know, ridiculous name, but it's really good coffee. Has a rum ball coffee, and it's not flavored, which I don't like flavored coffee. They actually take the beans and they throw them in rum barrels for I don't know how long. And then when it comes out, it just smells like you're opening a bottle of rum and coffee. You know, I'm more pirate mm, than I presumed when it comes to my coffee. So rocking some rum barrel. Very thankful for that. So if I'm drinking coffee, Kim, why not do the show? I appreciate you all being here. Please. I appreciate everyone's questions. And look, gang, you all remember going to school. Remember the teachers that were so happy when the students showed interest in learning? I could sit here talking to my cat, who's really almost 0% interested in what I'm saying, sleeping in the sun in his floof. Uh, I could sit around talking to him and have nobody who's interested in getting better at this game. Or we can have this great community, caffeinate and dominate community, and do it together. So super grateful for you all. All right, next question. Let's get to it. Happy Thanksgiving. Yes. Hey, Jack. May I ask you about the TLT position you traded? Sure. I'm going to go to ZB though, right? It was over. So I don't know what time frame. I'm guessing I opened a short put on 11/17. Okay. With an overbought slow stochastic. Lower high pattern. Sure. Closed it yesterday. All right. So here, Jack, here is where in the Sector Secrets Mastery, we do a session every week that covers macro. We go into a macro conversation, a longer term macro conversation. And the reason we do that is because certain dollar bonds, VIX, they tell us a lot about the risk appetite and risk aversion in a market. And while, yes, we can view this as overbought, I agree with you. The challenge right now with being, and this is where we can't just live in the secret squiggles and we can't ignore what bonds are really telling us about the market. The reason I didn't put this trade on, we went with dollar and gold, dollar long, gold short, is because of a macroeconomic understanding. Again, macro is not news. A lot of traders like to talk about macro, but really what they're talking about are headlines. Macro is a rate of change understanding of growth, inflation, and employment. Why those three things? Because those are the three things that the Federal Reserve also watches. So when you watch those three things, it maps more accurately to what they're likely to say and do. Incorrect macro, for example, you might say, Rag, I don't see the difference. Incorrect macro would be when the war in Ukraine started, when it first started. And you had a lot of people running around saying, oh, this means the Federal Reserve can't hike rates. That's incorrect macro. That's a headline. In fact, the headline actually forced the Federal Reserve's hand to have to increase rate because the war actually increased the inflation issue. And that's where we want to avoid calling macro news macro. And because it sounds fancy, I'm a macroeconomic specialist. Most traders are just talking headlines, and that's a really dangerous thing. So if we focus on real macroeconomics, Google it, you'll see what it's described as. We can measure that really easy. We can see the trend in inflation. We can see the trend in jobs or unemployment. We can see the trend in inflation. That's going to tell us that yields are likely to continue to drop, and that would not be a prime time to be shorting TLT or ZB, which is why we didn't do it. So you did technically, Jack, beautiful. Technically, you were spot on. Yeah, absolutely, my friend. However, I'd say macroeconomically, that position, as you know, not to rub salt in a wound, my friend, but that's where macroeconomically, that was the vulnerable part of that trade. And macro, gang, it's not complicated. It really isn't. For those of you that have been following along, either in Charts and Coffee or in the Sector Secrets Mastery, it's ridiculously simple. It really is, once you know what to look at. So great technical work there, Jack. Just make sure, especially when you're playing currencies and anything that's interest rate related, be very careful because macro and stocks, probably fine. Macro and some of these ETFs probably isn't going to be as much a factor. But currencies and treasuries in this environment, that's going to be really tricky. So anytime you're playing bonds, notes, Eurodollar, currencies, gold, these are going to be extremely macroeconomically sensitive. So thanks for the question, and great question. Thank you for sharing that. I'm sure you were not alone in that position. All right. How have I been doing in this market, Wilbur? Well, back in the, I never left the win column. Wilbur, not to brag. What did we do? So a lot of my Sector Secrets Mastery folks saw this up close and personal. The early part of this year was pretty good. As we got into spring, what happened? Finally, the Federal Reserve accepted publicly that inflation was not transitory, and we embarked on all the adjustments that are made in currencies, treasuries, and equities as we prepared for rate hikes. And boy, did the Fed start hiking rates. It was some of the most aggressive hikes, actually the most aggressive tightening cycle. Hiking and tightening are the same thing, lingo-wise, by the way. It's one of the most aggressive tightening cycles in the history of, well, humans in the US. And therefore, we had a lot of adjustments to make from a Fed who was basically denying that inflation was here to stay versus, the transitory comments versus whoopsie, our bad, and then embarking on this tightening cycle. So we had an adjustment to make, right? We're always going to take losses from time to time, but we have adjustments to make. And the way that we adjusted was that we said, look, the market's not sure where the Fed's taking rates, how aggressively they're going to get there. We had through June and July of this year about a 3 to 3.25% target rate probability, which within a brief, say 30 to 45 days, jumped to 5% plus. 2 whole percentage points that we as traders and investors, I don't mean just us here at Simpler, but we as traders and investors globally said, oh, the Federal Reserve is really going to drop the hammer on this. All that created uncertainty. All that created chop. It looked like we were going to be diving lower significantly in equities, and instead we would hit a new low, and most new lows were met. So when we hit a new low, meaning a new lower low for the year, almost every single one but 2 were met with dramatic short squeezes. Excuse me, which is to say they were met with a lot of buying. So we remain in this sort of choppy but bearish environment. Not great for daily time frames. Awesome for day trades. So the pivot wasn't a different stock. The pivot wasn't a different strategy or a different secret squiggle. That's seldom the first or correct pivot. The pivot was, let's just day trade. And so we've been day trading consistently, about 2 to 6 trades per morning by usually 10:30, usually not later than 11:30. But by 10:30, 10:35, 2 to 6 new day trades per morning. And at this point, we're at a 70+% win rate. That's the way that we adapted. And a lot of times, traders, when you're running into a tough period in your trading, and you're going to. I get the pleasure of doing it publicly, right? But I've chosen to trade in a fishbowl. It's my pleasure and it's my job. But whenever we start to run into difficult times, please don't think, oh my gosh, I got to reinvent my trading. 2 things. What time frame am I trading, and what's the structure on the time frame? And when you are dealing with choppy daily time frames, 2 things to do. Either lengthen the time frame out to the weekly, which is something we also did in the mastery, which is why we're in long positions like XLB from around $70, right? So we went longer term on the weekly. Let me show what that weekly looks like. Went longer term on the weekly, and we said, all right, daily, you're just not showing us the clarity that we need. The weekly was, and the 5-minute still is. And that's probably one of the best, that ability to shift into a different gear without thinking I have to reinvent my trading. I need a brand new secret squiggle. No, chances are you have all the secret squiggles right now to make that adaptation. Once you've made that adaptation, you can say, all right, what can I now add to it? So when we shifted from forget the trends to short term, that's why this year we introduced the hourly price movement range broadly. We started covering more symbols because, hey, in CHOP, having volatility zones that we can find and trade became really, really important. So I hope that makes sense. I hope that makes sense. It's been a very good year, actually. But it would not have been had I not shifted the gear to shorter term time frames. And sometimes I'm stubborn to do it. I love daily time frames. I love being in trades for days, if not weeks, and not having to be so, for an hour or two, actively very engaged with a 5-minute time frame. But if I didn't do that, there's no way I could have led the Sector Secrets folks and the Simpler Futures folks to a more, frankly, productive way of dealing with the uncertainty that we had. So yeah, it's been a very good year. How could I have traded that differently? Did I front run the setup? Not at all, Jack. Yeah, back to that ZB question. No, you didn't front run it at all. I think what happened is the macro got you. The macro reality of falling yields, which is bullish to ZB and TLT. That's all that it was. Yeah, that's all that it was. I don't think you did anything wrong, Jack. Not at all. Not at all. All right, next up is, what strategy do we use for range-bound days? Or is that a red flag and not to trade at all? Oh, gosh, Emily, I love trading range-bound days. And the reason I do, again, it's just a matter of adapting. One, how do we recognize a range-bound day? Some of that can be done on the daily time frame. There are patterns that I teach on the daily time frame, levels that I teach on the daily time frame that tell us we're more likely to continue or we're stuck in a range, right? So even before the bell rings, by looking at the pre-market, 7 to 9:30 a.m. Eastern, and looking at the daily, get a pretty good idea of what directional bias, if any, we might have. All right, then we move on to the intraday. This is Apple, right? This is the chart of Apple from Wednesday. And once we have range bound, once I can confirm that we're range bound like this, that's range bound, right? I can use a stochastic. I can use the V-score. And then, of course, I can use the hourly price movement range. And that's not neat. And by the way, you don't need those particular indicators. Maybe you have the free Darvis that I've been giving away for about 5 years now. Longer than that, right? Maybe you have the slow stochastic that I teach you all to set up. 80-20, 21-3, slow stochastic, available on pretty much any platform. Maybe you're using Darvis, slow stochastic, and whatever, maybe it's ready, aim, fire, right? So whatever tools you have that will help you identify overbought and oversold in a range bound 5-minute chart, daily chart, that's going to be really, really helpful. Then you can add more nuance. Then you can say, well, are we above or below the line in the sand? Are we above or below the VWAP? Are we above or below, key volume levels? Where are we in relation to the previous session close? Things like that add more, sort of texture to, all right, this is where traction could be versus, bullish versus bearish. Yeah, I hope that makes sense. All right, Cashmax, anti-Raghee. That's my handle over at Twitch. Yeah, my nephews were on Twitch playing video games. They said, "Can you watch us?" So I started my anti-Raghee. Oh, yeah. Anyways, thanks for the laugh. What are my thoughts on BMY? Sure. Cashmax, BMY. I like XLV to the long side. It's hard to find something in XLV that we don't like, right? And I think you've glommed onto a really good one there. If we go take a look at healthcare, XLV can be really a pain because it lacks sometimes liquidity at the strikes that we want. But take a peek here. Great choice in BMY. Amgen, I'd put in the same category for buy the dip. Merck, AbbVie, Pfizer, Lilly, Johnson & Johnson. I would avoid Danaher. I would avoid Abbott. I would avoid Thermo. I would avoid UNH. Not that they're not buyable. But I would say UNH could be great at the 200 propulsion. That could be a good one at the 200 propulsion. But the double greens should be those, Johnson & Johnson, Lilly, Pfizer, AbbVie, Merck. Johnson & Johnson, by the way, being the best proxy for XLV itself due to the weighting it has. But you've got a great one. And here's where BMY is interesting and different than Johnson & Johnson. BMY is going to move, generally speaking, with J&J and XLV. However, because it's lower weighted, it will, sometimes for better, but sometimes for worse, be able to separate a little bit from that broader narrative. And that's what a lower weighted stock can do. So let's say XLV pulls back, BMY with that lower weighting can pull back too, or it could just shake it off because of that lower weighting within the XLV. So it's going to be a little bit more immune. Sometimes it may not benefit from the rally, but sometimes it can hang on in there and do its own thing. So keep that in mind with lower weighted stocks within the sectors. As far as the daily time frame, yeah, I would continue to buy dips. I mean, look at this. Dips on the 11th, the dip on the 15th, the dip on the 16th, and finally, before we launch, the dip on the 17th. That's my bread and butter on a daily time frame. Somebody asked earlier about buying the dip and following trends. That's it right there. That's it right there. Now, if you want to pull a Fibbo on there, what I do, for those of you that have the Darvish 3.0, which I believe is on sale, if that one's on sale, I don't know if it is, but if that one's on sale, you can pick that thing up for about 60 some odd dollars. That's pretty good. Yeah, so here's how I'm going to do my Fibonacci work. Okay, Fibbo work is not complicated. Just connect the arrows. Yeah, there you go. Beautiful. Oh, that's fantastic. Look at that. Boom. That's where I'm looking for the pullback. That's the confirmation for where support is at. And then you could do one other thing for the target, and that would be pulling a Fibonacci from this more recent sell-off, from the minor high to the minor low. Again, the Darvish 3.0 is a really great tool for that. And then put in some extensions, right? Put in some extensions, maybe the 886, maybe the 786, but definitely the 1.272, 1.618, and ask yourself where some of those extensions would be. I would make my first target at least 81, or at very minimum, move to break even, and then you can say, all right, let's see if we can't make a run towards 83 and then 85. So you can use the Fibonacci retracement to confirm the pullback. You can use those extensions, and I only use a 2-point extension. I don't do 3-point extensions. You can do the extension to look at upside targets. But remember, please don't put your first target where the market has to go break to a new high. Make that a second or third target, but don't make it the first. Really, please respect the double top here, the double top we have. And that would probably be a great place to step out in front of size. All right. So next up is, I know there's a long position XLK, but is it approaching resistance on the daily? The long position, Dane, that I have in XLK is based on the weekly. So my time horizon on this is far greater than obstacles on the daily. We've already built that position from down in this area, right? My main concern is probably about 150, right? Because again, the time horizon is going to dictate the structure, as well as, quite frankly, what I consider an obstacle to be. Because obstacles on a daily is very different than looking at obstacles on the weekly from time to time. And while I'm bullish on XLK and right now long the shares, because that's in my longer term portfolio, and that's that session I was talking about that we do on Tuesdays. That's where we start building positions like this: long XLB, long XLP, long XLK. Those are all positions that came from that conversation. On the daily, I'm actually looking at whether or not we're overbought. So yes, we are running into some resistance on the XLK. Yeah, we sure are. I'm not in XLK on a daily setup though. I'm on XLK from that weekly. You might say, Rog, what's the difference? Oh gosh. Please treat each one of your time frames, quite frankly, as if they were completely different symbols, right? Think about each one of these time frames looking at a completely different slice of psychology, which means I could be short the 5-minute, I could be flat the daily, and long the weekly, which I believe this week, same thing with XLF, any of these. I could be bullish weekly, but I could on that particular day be long puts on an intraday setup. So don't be surprised. And this is the other reason I do not use multiple time frame confirmation. I use each time frame for the world, for the psychology that it represents. And that's why I don't care if the 5's agreeing with the 15 and the 15's agreeing with the daily or the hours. I don't care. If multiple time frame confirmation really worked, we'd all be profitable. It sadly does not. It seems to make sense that, oh, if the 1 hour is doing this, then this behavior on the daily is inevitable. Again, all of us are exposed to multiple time frame confirmation very early in our trading careers. I have found again and again, it actually doesn't work. And worse, it tends to put us down the very slippery slope of, well, if the 1 hour doesn't agree with me, maybe the 4 hour does. And if the 4 hour is not really agreeing with me, maybe the daily does. And what happens is we start shopping time frames, looking for the one that agrees with us. Very tricky. Now, some of you might say, Rog, it works great for me. And if it is, it's because you've got the discipline to build the setup on that one time frame and just use the other time frames as a little bit of understanding of bias, but not as an excuse to hold on to a loser or justify a more ambitious target, right? It's because you've got discipline. And frankly, because you have discipline, you could use any kind of style, but I am not a fan of multiple time frame confirmation. So I'm always going to encourage everybody to find a time frame, stick with it, build the trade, understand the risk and position size according to it, right? So XLK is an awesome weekly setup, but daily is in a whole different scenario for me. So Dane, thank you for the question. Good stuff. All right, next up is the first hourly chart is really 30 minutes. So the 30-minute is as important as a 60-minute. I don't use those time frames, my friend. I don't use those time frames at all. So I really don't know. I don't mind to say I don't know because, look, unless I'm using it and trading it and putting my money at risk, that's why I'm not a big fan of setting up trades that I don't intend on taking, because how good is the analysis done? It's a different level of analysis when we know that our capital is going to be at risk. So my friend, I have no clue as far as what the value of either would be, because I don't use either one of them. However, I will tell you, if you're looking for volume and you want to see the nuance within the clearing period, which I love, you're acknowledging where we are, not just between 9 and 10, but between 9:30 and 10, right? The clearing after the bell rings. Use a 5-minute chart. Use a 5-minute chart and look at volume levels as the orders that are filled between 9:30 and 10 put in that clearing range. What's the volume at the high and low of the range? Where is the point of control from 9:30? I don't use those time frames, but that's what I do instead. That 5-minute and acknowledging the high and low of that clearing range or opening range. All right, next up, I'm still a bit confused on how I arrived on the TLT strike based on the ZB. Trader Momo, what's at or in the money slightly when the ZB trigger is reached? When ZB trigger is reached, go take a quick peek at TLT. Say, okay, what's at or in the money? That's it. I'm a very simple carbohydrate when it comes to trading. Yeah, we don't want to make it too complicated, especially for day trading. All right, next up, Jason, the stochastic and the V-score look very similar in structure. Does the stochastic measure volume as well? The V-score measures the volume weighted average price, and stochastic is a price-based indicator. Now, there are some price-based indicators that will factor in volatility or volume, but they are going to look kind of similar because, well, think of it this way. If you are looking at a V-score, volume-derived tool, and V-score is at a volume resistance, when the stochastic hits price level resistance, wouldn't it make sense that there's probably some volume there as well? So they're not going to look the same all the time, but they should look similar, because when price is running into resistance, volume should be running into resistance too, but we're measuring it through two different metrics. So price is a factor, volume is a factor, volatility is a factor, and time is a factor. So I want to look at all four of those things, and when they're in sync, that tells me price and opinion, price and attention are they're locked up. They're in sync. And that's why when they're working well, you'll see those sync up really, really well. I forget what the, but you know what? Just out of curiosity, I think a lot of people think, professional traders, and I don't consider myself a professional trader. That means something completely different in trading, by the way. Full-time, yeah, that's what I am. But I think a lot of folks think, oh, well, we've tested everything, we trade everything. Not necessarily. I don't remember what the calculation actually is. Let's look. Good old Investopedia. What do we have here? I'm sure they'll have the calculation. They usually do. But I think it's only price. I can't remember. I've been using this for so long, I haven't even thought about it. But yeah, it's a price-based tool. Yeah, it's moving averages, and yeah, there you go. Look at so if you might say, okay, what does that mean, Rog? It's all price. The most recent closing price, lowest price, highest price. And I use a 21. So most of this would be that and that and that. So I pull that way further out in the calendar. You'll see 10 is oftentimes a default. Some people will use 14. I like to go way out to 21. And that's unusual. So using a stochastic is not so unusual, but the fact that I use such a slow and 21 periods. So no, there you go. It's all moving averages and price. I forgot about that. It's okay to say we don't know. It's totally okay. Where do I post my free indicators? If you're on TradingView H, you can go to just search for Simpler, and you'll see the free indicators that we have unlocked. And if you're in any of our memberships, I put my layout in the room drive in a number of our rooms. So you don't have to be a part of my mastery. You can be a part of most of the major rooms at Simpler, and you can grab my free tools there. But the easiest way to get it without a membership at Simpler would be go to TradingView. Okay, would be to go to TradingView. All right. So next up, and probably last. Hey there, Dane. All right, last question for the day. Thanks for all. Oh, my pleasure. Is Netflix trying to complete a Dow 1, 2, 3 pattern? All right, love the question. So there's a Dow 1, 2, 3 reversal, and there's a Dow 1, 2, 3 continuation. And I would say no, too big and too long. Yeah. In fact, you're green now, Dane. You're green. Buy the dips. Buy the dips. Pull back. A little neutral, but that's dip buyable. Pull back. All right, here we go. Green. Beautiful. That's buy the dip. All right. That is buy the dip. As far as the indicators on TOS, they're in the room drive. There's no way to share them on TOS. In terms of being built into the platform, that's a whole other thing. We have to import them in. So what I do in the room drives is I share the shared item for my indicators. And so if you're in the futures room, options room, of course, my sector secrets mastery. I can't remember if it's in the day trading room or not. But if you're in any of those major rooms, just grab that layout. It's a shared item. That's the way it works for TOS. But on TradingView, it's built into the platform. Okay. Yeah, of course. My pleasure. All right, gang. So hopefully everyone's got some relaxation coming up, probably some shopping. I'm going to do a little shopping today. Yeah. Stock up on my favorite coffee. I know my mom's got a list. So going to go do that. As always, gang, thank you so much for joining me for our third annual. Can you believe it? Third annual Charts and Coffee Thanksgiving edition. Grateful for you all. Grateful for your dedication to learning this craft. I love the community. You all are positive, looking for the opportunity. Gang, we are some 30% smarter when we're in a good mood and positive. It just is profitable to be an optimist, period. Right? You're not going to meet many rich pessimists out there. Right? Which is why it's so sad when I see people saying the economy is this and there's no opportunity. It breaks my heart. And I appreciate you all staying positive. That's how you make it through the markets, gang. Being a negative, being a perma bear, being an alarmist, it doesn't pay. All right. And if you're watching this show, you probably believe that, right? And if you don't believe that, you probably don't watch this show. And that's okay too, right? I just wish you all the best in your trading. And I'm grateful to help in any small way that I can. Be good to each other, gang. Happy Thanksgiving.